Well, welcome into a daily editorial here on the KE Report. In this daily editorial, I am chatting with Jordan Roy-Byrne, the founder and editor of the Daily Gold. And Jordan, I have to say, your technicals have been very accurate, really, for the last year since we've been talking on a regular basis. And one thing that I appreciate about your technicals is your ability to look both at the positives and the negatives. Unfortunately, what we're going to do for all those gold bulls today is look at the negative side of some of the factors in gold. First and foremost, yes, gold is continuing to drift down, closing in right about that 1300 level. It is still above there. Your initial comments, what is the significance on 1300, and potentially if it is broken, what are we going to see for gold?
Well, the significance, I would say, is clearly the 200-day moving average. I don't know where that is right now, but it's around 1300, might be a little bit above. Looking at the chart, there's a confluence of support around 1300 to 1310. And then when you look at the weekly chart, the support is at 1310. So there's a good chance we're going to break below 1310. And the next strong support area is really around 1260. So again, if gold were to lose 1310 on a weekly basis, which just means closing below 1310 on Friday or next Friday, that is going to increase the risk that it's going to test 1260. Now we're in a new month. If we look at the monthly chart, it's just not bullish in any way. The last 3 months, gold has traded. I mean, well, let me say this: the last 2 months, gold traded up to 1350, but then it closed both months below 1330. So we basically have two failed breakout attempts in the last two candles on the monthly chart. It's just not the monthly chart, is just the candles we've made in the last 3 months are just really not what you want to see from a market that's about to break out. It looks like a market that could have a negative month in May. So looking at those factors, and then you factor in the dollar rally, which, I mean, the dollar's made a really strong move higher. It's gone above the 200-day moving average. You know, I haven't checked the dollar yet today. Well, I think it's up a little bit. It closed at 92.25 yesterday, so it's probably close to 92.50 today. But looking at the chart of the dollar, it could rally a couple more points here. I mean, we can talk more about the levels later, but this is a significant dollar rally that we're having. This is not just a little blip that's going to roll over again. It looks to be pretty significant. And there's some more room where it could rally and still be in a bear market. So unfortunately for gold, I mean, the only good thing so far is gold against foreign currencies has held up really well. And we really need to see that, as well as gold against stocks, continue. I mean, if those things can hold up really well, trade above their 200-day moving averages, while gold is testing lower levels, that would be comforting and tell us that, we're just having a correction here and nothing too serious.
Okay, so a couple more comments to be made on gold before we get a little bit more into the US dollar, which is a very important rally, as you pointed out. Yeah, as you said, though, about gold on the monthly chart, the last few months have been very weak. And one thing to consider is that the Bollinger Bands on the monthly chart, we haven't seen them this narrow for this long until back in 2002. So this really is a boring market for the sector. And if we do start to see some more negative signs, that break lower, potentially down to 1260, is very possible. Now, what is also important is assessing or determining what we would like to see happen if gold does get down to around 1260. How important would a bounce be from here? For still your general outlook, and the outlook that I still maintain, is that the later part of this year is when we have the best potential for a breakout to the upside for gold.
Yeah, well, it needs to be a very strong bounce, and I mean, that's not something that we can evaluate. Unfortunately, we can't really evaluate that in a couple days or a couple weeks. I mean, it'll take some time to really know how strong of a bounce it is. And also looking at gold against foreign currencies in the stock market, that will be equally important, because if those things are trading above their moving averages and showing strength, that will tell us that gold will probably, the gold rebound should probably have some legs. So it's going to take some time, but that's an important level. And then if you look at the 40-month moving average, which has historically been a very significant moving average for gold, that comes in at around 1235. And then there's if you connect the end of 2015 lows and the end of 2016 lows as a trend line, that probably comes into play a little bit between 1260 and 1235. So around the mid 1200s, that's really the next key area for gold. And yeah, obviously it needs to hold there, because if it loses that, then we're talking about a deeper move lower, and that obviously would not be good, and that would be a surprise, because come even last year and coming into this year, I thought the breakout would be in 2018, but we'll just have to see. I mean, a lot will depend on how other markets are performing, but it's going to be crunch time for gold in the next second quarter and the third quarter to see if it can actually make a move higher, or if this recent failed breakout is a lot more significant than we thought.
All right, Jordan, let's move over to the U.S. dollar. You already mentioned a couple points on the dollar and this rally that it's experiencing. Plus, more importantly, I think the changes that we're seeing in the global currency markets, people really starting to unwind that dollar bearish trade that has been in play for a month or about a year and 4 months. But when we look at the dollar, it has made, this is something you pointed out to me that I think is very, very noteworthy. The dollar has made 2 new lows in the last 8 months. And on the flip side, gold was unable to make a new high. This is another negative factor, isn't it?
Yeah, I mean, this is my biggest negative as far as gold starting a bull market, in the months ahead. It's just a major concern that gold, the first time I think was in September. So what that means is gold penetrated to the downside. It's 2016 low, the same low when gold peaked around 1370. So that happened once at the end of last summer, September. And then secondly, just in recent months, where the dollar actually penetrated that low. So the dollar, I mean, when gold was at 1370, the dollar, I believe, was around, I want to say 93, maybe the high 92s. And so the dollar recently came down to 88. So that's a pretty big lower low for the dollar, yet gold did not make a new high. I mean, that is really damning. And, I've seen a lot of talk. I've even gotten some emails that said, no, you're wrong. The dollar's going to keep going lower. Gold's going to break out. Anything that mentions the dollar is bullish for gold here is really missing the bigger picture, which is the dollar did go down a lot and gold didn't break out. So that's the most damning thing for gold in the potential bull market. And so, if the dollar, and that's another reason, by the way, why this rebound in the dollar is going to be significant. And so we'll just have to see how gold's performing against foreign currencies. So far, so good. I mean, that's a good sign. We'll see if that can hold up, if the dollar gets up to 95-ish, where if you look at a monthly chart of the dollar and its history, just use the 40-month moving average. It's been an excellent indicator as far as bull and bear. And so that's coming into play at 95.91 right now. So that tells you how far this dollar rally could run with the dollar still being in a bear market. So that's definitely something to keep an eye on, and especially because gold's performance will tell us, how far the dollar is going to rally. If the dollar looks like it's going to rally a couple more points at least, and if gold can hold firm above 1260, even with the dollar 94 trading at 94.95, I mean, that would be a pretty good sign for gold. But if gold just looks weaker and weaker and can't get that much traction while the dollar is around 94.95, that would not be a good sign. So again, it comes down to gold against foreign currencies at that point. So, I mean, I don't mean to ramble on, but this is definitely a serious dollar rally that is happening. And it's even leaving some to question, is the dollar in a bull or a bear market? And we know that, it can rally nearly to 96 and still be in a bear market.
Yes, it can be. Now, one final question, and I do agree with you that the dollar is the big determinant here, and how gold reacts is very important. But what about the precious metals stocks? We've seen limited movement, whether it's been to the upside or the downside, reacting to gold. And even yesterday, we saw gold down, and GDXJ, they managed to put in slightly positive days. There's a bit of a discrepancy going on here, but a discrepancy in the sense that the precious metals stocks just aren't really doing anything. Where do you want to see them move? What do you think will be important to watch?
I think gold will be important to watch. And the reason for that is, the precious metals stocks, and I mean, this is kind of subjective, but at points in recent weeks, I mean, they were holding up well, showing strength. I mean, they were showing some good breadth, but, it all disappeared once gold failed to break out. And we were talking the last time a couple weeks ago where I was more optimistic, and that was because there were these good signs in the stocks. And, then almost immediately after that, I turned bearish. But anyway, it's just a lot of, the fact that the stocks are holding up well on a certain day or they're showing good breadth. To me, that it's more of a coincidence. I don't know if it's really that significant, because it's clear that silver and the gold stocks are not going to do anything until gold breaks above 1360. I mean, they might have a token rally here or there, but they can't really do anything that positive or positive that's sustainable until gold breaks above 1360. So I really don't see the stocks telling us that much when, if we just go back the last 5 or 6 years, I mean, it's so obvious to me that the stocks and silver are not going to do anything until gold breaks above 1360, 1370. So, I mean, it's just disappointing. But I see, with the fact that gold is trading below that resistance and it's basically in correction mode, any leadership from the stocks is right. I see it as really a coincidence and not the fact that, like, oh, well, big money's accumulating the miners because they think gold's going to break out. I just think it's more a function of this market has been completely bombed out. Even after the huge pop in 2016, it's corrected, consolidated for, almost 2 years now. So I just think it's a coincidence or a function of there's not a lot of money in the market. And so maybe a couple days here and there, the stocks look like they're leading. It's really subjective. I mean, it's really difficult to pinpoint, but I mean, that would be my opinion. Unfortunately, gold is really what matters here for the stocks. And until gold breaks out, we can't really overcomplicate the movements in the miners.
Okay, I don't think there is much more to say here, Jordan. We did outline some of the negative factors that do need to be considered for the metals. Right now, I think we're just waiting to see where this pullback stops, and it is not out of the question for it to move under 1300 and down into that about 1260 region. But hey, Jordan, always great chatting with you. Hope you have a great rest of your day, and we're going to recap again next week, hopefully with some more positive news, but quite frankly, we might still be seeing a bit of a depressed precious metals price. Thanks for your time, Jordan.